All right, stocks really ramping up and continuing the recent strength. The green light holding on to equities as we get so close to the all-time record. Today's session, though, a little bit too juicy for my taste. A little bit extra froth, I think, than what the market might be able to handle. So I'm a little bit weary going into the next 2 days of this week. Just too much dollar downside. I mean, this thing's getting slammed. I worry that investors might be falling into the bad is good trap again. We tried to rally on just an awful revision to the job situation. Ultimately, we came back after fading it, but the minutes, too, seem to point towards a Fed ready to cut. And okay, that's fine. Not bad thing to tweak the policy to allow our economy to stabilize. Now, I could go on a whole rant about how all the late cycle indicators have basically already told us that kind of the cat's out of the bag, the Pandora's box has been open for unemployment. But obviously there's a possibility things could change. There's always a possibility things could be different. But in the meantime, in the very short term, this just doesn't seem like the type of market that we should be rooting for. Look at the last couple of weeks here. As I've talked about since the bottom on August 5th, the market has enjoyed yields going higher and the dollar going higher. Now it's all totally reversed, but stocks are still staying bid. To me, that doesn't quite make sense because the bottom on August was put in because we got extreme moves in volatility. One, that probably just can't last for too long. But two is that we had stabilization. The yen cooled off, the dollar stabilized, yields came back up as we had good economic data. The whole point of the bounce back was that the market said, all right, the recent data we got, give us some relief relative to the bad employment report that we saw from July. So the whole bounce back trade this month has been about things actually not going down a cliff. So then when the dollar starts selling off again, there's really only a few messages there. One is related to cuts, yes, but we still have fewer cuts priced in than we did at the emergency moment on August 5th when we were looking for 50 bips. So you can't really say it's about that. I think it's pretty clear what it's about. It's about the economy losing its edge in the U.S. to the rest of the world. The pound right now is rising. The euro right now is rising. The yen is rising as well. And with the dollar in free fall, then basically you can conclude a couple things. One is that yields are likely then to follow the dollar lower. So more likely than not, bonds are going to be set to rally if the dollar stays down. And the market, I thought, just told us that that's not a good thing. We want good information. We don't want bad information. Trying to spin bad information like we got again today from that bad revision, I get that it's old and outdated, into something positive still feels to me like a trap. We put in the bottom for stocks because yields bounced back. We want to see that relationship hold. We don't want to see the dollar fall apart. That means we're losing our competitive edge. So that to me is a little bit alarming. The bad is good situation shouldn't be the way we think about this market right now. What matters is the economy stabilizing. So if the dollar continues to collapse, then you're basically building more tinder and setting the stage for another yen blow up too. So as long as the dollar keeps dropping, any surprise from the Bank of Japan is going to flare that trade back up again. And it kind of seems like people got back into it. So I've never been a big believer that the Japanese yen situation was the reason why we got hit in the first place. I think that was more the gasoline. But I'm just saying, if the dollar keeps falling apart, that's telling us that the fire hasn't been put out yet. So I think we need to be wary. The other thing, too, is the action that we got in Bitcoin today. The chart is looking really interesting for Bitcoin. If Bitcoin breaks to the upside now, that would be a pretty big move. But it also, to me, signals a little bit of froth that's misplaced right now. I would be watching BTC really closely here over the next 24 hours because whichever way it moves, I think is going to tell us something important. If it breaks down, then I think we've got a real situation that tells us, again, bad is not good for anything. Bad shouldn't be good for stocks. Bad shouldn't be good for Bitcoin. It's a speculative asset. It requires extra money to be thrown around whimsically. So if the dollar keeps falling apart here, I think that the market is possibly setting up another trap. So be wary. I'll see you tomorrow.